This is still the lecture for topic 1. This is I continue this topic 1 from the previous video. Okay, just to remind you, after you watch this video and after you watch other lecture videos, you have to write your name and matric number in the comment section. I will take that as the attendance. And remember, in UPM, if your lecture attendance is less than 80%, you cannot sit for the final exam. So remember about this and do this every time you watch a lecture video. And then also I hope each of you has subscribed this video channel so that you can watch previous video and you can watch future videos. Okay, the subtopic here is types and forms of business ownership. You have learned about the definition of accounting in this topic. So just to refresh your memory, the simple definition of accounting is a process to record and a process to analyze and record business transactions and to report financial information. So accounting is a process, something that you have to do when you want to record business transaction and to calculate profit for a business. So when you want to do accounting record, it is very important for you to know about the types and forms of business ownership, because the way to do accounting record is different when the type of business is different. Accounting record for a small business is simple, and accounting record for a big business is complex. So that's why you have to know what type of business that you have to know every type of business so that you know how to do the accounting record. So let's see. So there are many businesses out there. If you go out there, there are many businesses, and these businesses can be categorized into several categories. Just like you see, there are many people out there. There are many people out there, and you can categorize people into several categories like gender, education, citizenship, level of income, etc. So same goes to businesses. There are many categories of businesses. So if for the type of businesses, we can categorize businesses into 3 types. First, service business, and then merchandising business, and then manufacturing business. So let's see the service business first. Okay, remember this, the definition for a service business. A service business is a business that does not produce anything but provide services. Again, a service business is a business that does not produce and sell any product but provide services. The typical example of a service business is a clinic or a hospital. A clinic and hospital, they do not sell anything, but they provide medical service. Another one is a taxi. A taxi service. A taxi is a service business. The driver does not sell anything, but provide transportation service. Another one is laundry business. A laundry business does not sell anything, but it provides laundry service. So let's see other example here. In this, see this in this box, in this note, Astro. In Malaysia, we have Astro. It provide entertainment service, and also we have Malaysia Airlines, or we have another one. It called what? AirAsia. AirAsia is a service business. Malaysia Airlines also is a service business. They provide transportation service. Hotel is also a service business. Bank is also a service business. Telecommunication, internet provider, mobile phone, mobile communication service business, also a service business. Okay, they provide telecommunication service. Okay, just remember the definition of a service business and also several examples of service businesses. Okay, another type of business is called merchandising business. Remember this. A merchandising business is a business that purchases product from supplier and sells the same thing to customer. These businesses, they purchase product from supplier and sell the same thing to customer. The simple example is a grocery shop. A grocery shop purchases bread, sugar, rice, milk from supplier and sell the same thing to us, to customer. Same thing. That kind of business is called merchandising business. In Malaysia, we have big supermarket called Tesco. Tesco is an example of a service business. We have Senheng. Senheng is a business that sells electronics appliances to customers. So Senheng is also a merchandising business. Another one, now we have merchandising business that sells product in the internet. The example that you can see here is Amazon.com. Amazon.com is a merchandising business. Now in Asia, I think in Malaysia, we have Shopee, Lazada. These are also a merchandising business. They purchase, basically they purchase finished product from supplier and then sell the same thing to customer. So if you compare service business and merchandising business, which one is simpler? Service business is simpler because a service business does not sell product, does not sell anything, but provide services only. So very simple. They have no inventory. But a merchandising business is a bit complex because a merchandising business has to purchase product or items from supplier, and then these products are kept in the business. These things are called inventory or stock, and after that, the merchandising business has to sell the product to customer. So this merchandising business is a bit complex compared to the service business. Okay, the next type of business is called manufacturing business. Okay, remember this. A manufacturing business is a business that purchase and process raw material. Okay, again, a manufacturing business is a business that purchase raw material and then process the raw material and then produce and sell finished product. Okay, again, a manufacturing business is a business that purchase raw material from supplier and then process the raw material and then produce and sell finished product. Basically, a manufacturing business is a business that has factory. So when the business has factory, the business process something and produce something and sell something. So imagine this manufacturing business is very complex because there are many processes there. The business has to purchase raw material and then process the raw material. The process is a complex situation. and then produce a finished product, and then the business also has to sell the finished product. So this kind of businesses is called manufacturing business. There are many manufacturing business out there. So the example that we can see here is General Motors Corporation. This business produces cars, trucks, and vans. Samsung produces cell phones, tablets, and many more items. That Incorporated, Nike, the Coca-Cola company, and Sony Corporation. We have many more. So these kind of businesses, they are manufacturing businesses, and these businesses are complex. They have many processes in the business, happen in the business. So a manufacturing business is more complex compared to the merchandising business. So you can imagine, if you make accounting record for a service business, then the record is simple, because a service business is simple. But if you make accounting record for a merchandising business, then it is a bit complex compared to accounting record for a service business. A bit complex. But if you make an accounting record for manufacturing business, then you know the process is very complex, because the business has many activities. Purchase of raw material, process of raw material, production of product, sales of product, so many things. So the accounting record is also complex for this kind of businesses. In this course, you will learn about how to do accounting record for a service business only. Very simple. You learn the simplest accounting record. Later, if you take other accounting courses, you will learn about how to record, to make accounting record for a merchandising business, and also how to make accounting record for a manufacturing business. Okay, next. Like I said earlier, businesses can be categorized into many categories. The thing that you have seen in the previous slide is category based on type of businesses or sector. Okay, but now businesses also can be categorized in terms of ownership. Ownership means who own the business. Okay, if we see companies, if we see businesses in terms of ownership, we can categorize them into at least 3 categories. Okay, there's at least 3 categories. First, sole proprietorship. Second, partnership, and the third category is company. It's supposed to be 3 categories here: sole proprietorship, partnership, and company. These categories are based on rule and regulation that effective in a country. The categories that I explained here is effective in Malaysia. Maybe in Indonesia you have different categories of business ownership. In China you also maybe have different categories of businesses based on ownership. But the thing that I will explain here is categories that are used in Malaysia. Okay, so let's see, what is a sole proprietorship business? Okay, remember this. A sole proprietorship business is a business owned by one person. So if you go to Malaysia and you see that a business is owned by one person, maybe the business is a small grocery shop, or maybe the business is a small laundry shop, or a business is a small restaurant, etc. So if you see a business is owned by one person, then the business is called a sole proprietorship business. Very simple. In Malaysia, very easy to start a sole proprietorship business. It only you need only several hours. You go to the company registrar, you register a business, and then you can start a sole proprietorship business. Very easy. So a sole proprietorship business is a business owned by one person. So there are several benefits of starting a sole proprietorship business. First, it is very easy and fast to start a sole proprietorship business. Number two, advantage of starting or running a sole proprietorship business is it requires low cost of organization or organizing. Very easy to manage. You start a small business, and then very easy for you to manage because the business is owned only by one person. But even though the business is owned by one person, the business can hire several workers. Like you see many restaurants in Malaysia, or many laundry shop in Malaysia. It is owned by one person, but the business or the owner of the business has several workers. That is very typical. Okay, but there are several disadvantages. First, the capital of this business is small because it is limited to financial resources of the owner. If the owner of the business is only one person, if the owner of the business has $30,000, so that is only the capital, limited. And then the second disadvantage that I can remember is if the business is making loss, then the owner of the business, the only owner of the business, one person, has to cover all the losses. So let's say you start a small sole proprietorship business, but unfortunately after 1 year the business is making loss. You as the owner of the business has to cover all the losses. Okay, that's the disadvantage. If you read the textbook, there are many more advantages and disadvantages for sole proprietorship business. I hope you can read that. Okay, the second type of business that we have in Malaysia is called a partnership business. A partnership business is a business owned by a partnership business is a business that is owned by more than one person. In Malaysia, the number of owner for a partnership business that is allowed by the law and regulation is 2% to 20%, yes, if I'm not mistaken. Okay. So the thing is like this. There are businesses in Malaysia is that partnership businesses. That business is owned by more than one person, but not more than 20%. For example, we have a clinic in Malaysia. We have a clinic in Malaysia that is owned by 3 doctors. 3 doctors, they have capital, they like each other, and they start a business together. Sometimes the doctors are 2 doctors, husband and wife. They start a clinic, and then they both are the owner of the business, so they form or start a partnership business. It happens. So the good thing about the partnership business is remember the business is owned by 2% to 20%. So the good thing is if you start a partnership business, the possibility is you will have more capital because there are more owners. If one person has $20,000, another person has $20,000, then the total capital for the business is $40, more than sole proprietorship. So proprietorship is a business owned by one person only, so limited capital. But if you start a partnership, you can get more capital compared to a sole proprietorship business. Imagine you have 10 partners. One partner has $20,000. So 10 partners, you will have $200,000 capital for the business. Then you can start a bigger business, a big business. Okay, so that is one advantage of starting a partnership business. Another advantage of starting a partnership business is you can combine the skill and resources of more than one person. Let's say you start a sole proprietorship, and you only good at you are good at selling only. So the sole proprietorship business is started by one person, and that person is good at selling only. That is not enough for a business. If you want to start a business, you have to be good at sales. You have to be good at management. You have to be good at marketing and advertising, etc. So one person has only, most of the time, has one skill. But if you start a partnership, let's say you have 10 partners, then that is a good thing. One person may be good at selling, another person is good at human resource, another person is good at IT, another person is good at advertising, etc. So you can combine skills. That's the good thing about partnership. Okay, but there are several disadvantages also of a partnership. If you start a partnership, one of the disadvantage is it takes time to make a business decision, because when you have many owners, when you want to make a business decision, like how much is the price for your product, how many products to be sold, how many workers to be hired, when you want to make this kind of decision, you have to discuss with all the partners. If you have 10 partners, you have to discuss this 10 partners, 10 people have to discuss. So it takes time. This person say this, another person say that. So it takes time to make business decision. But for us, sole proprietorship, the owner is one person, so business decision can be made very fast, very quickly, because he is the only one person has to decide. But for a partnership, all the partners have to agree before any decision can be made. So that is one disadvantage. Another disadvantage of starting a partnership is if the business is making profit, then the profit has to be shared among the partners. Let's say you start a partnership business, there are 10 partners, and then at the end of the year, the business made $100,000 profit. You are happy. Oh, this business is making $100,000 profit. That is a lot. But you have to remember, you have to divide the 100,000 profit with 10 person, because there are 10 owners. So every partner will get only 10,000. But if you start a sole proprietorship, the good thing is, if the business is making $50,000 profit, all the profit can go into the one owner pocket. Let's say you start a sole proprietorship business. At the end of the year, the business is making $50,000 profit. All the profit can go to your pocket. That is a good thing. So that is the comparison between sole proprietorship and partnership. So you can see here, these are the comparison between sole proprietorship and partnership. So the most important thing is, the difference is, a sole proprietorship is a business owned by one person, but a partnership business, the business is owned by 2 or more person, but less than 20%. That is for Malaysia. In other countries, maybe it is a bit different. You can check your regulation and law and regulation in your country. Is there anything like this in your country? You can check. So you can see here another one is capital contribution. For a sole proprietorship business, amount contributed by the owner. And for a partnership, capital is the amount contributed by all the partners. If you start a partnership, the owner of the partnership business is called partners. Let's say you have five friends, and then all of you want to start a restaurant, and then you start a partnership business. The restaurant is owned by 5 people. These 5 people are called partners. They are partners in a partnership. Okay, and then liability. In terms of liability, number 3, you can see there liability, unlimited liability, and also for partnership also unlimited liability. Okay, unlimited liability is like this. If you start a sole proprietorship or a partnership, and then let's say your business borrow money from bank. Your business borrow money 50,000 from bank, and then after 1 year, your business does not do well and bankrupt. You have to close your business. When you have to close your business, bank want their money back. So they want their 50,000 back. So for sole proprietorship and partnership, bank can claim the business asset, and also bank can claim the personal asset of the owner of the business. So let's say one day you start a sole proprietorship, and then your business borrow money from bank 50,000. After 1 year, your business does not do well. You close your business. Bank wants their money back. Bank can take your business asset. Bank can take your business cash, business building, land, etc. If the business asset is not enough, then bank can take your personal asset. Bank can take your personal car, your house, or your cash. That is called unlimited liability. The liability of the business is unlimited. Same goes to a partnership. If a partnership business borrow money from bank, something bad happen, and then the business has to be closed, bank can take the business asset, bank can take the business cash, etc. But if the amount is not enough, then bank can also take the owner, the partner's personal asset. Remember that. That is what we call as unlimited liability. When you start a partnership business or sole proprietorship business, always remember, the business has unlimited liability. The business has to pay its liability. If it is not enough, then the owner of the business has to pay the liability. And then in Malaysia, see number 4, in Malaysia we have no specific act related to sole proprietorship, but for partnership we have Partnership Act 1961. Okay, this is related to law and legal law or legal. So when you want to start a partnership business in Malaysia, you have to refer to Partnership Act 1961. Okay, number 5. No legal separation. For sole proprietorship and also partnership, no legal separation between the business entity and the owner of the business. Okay, remember this. In Malaysia, if you start a sole proprietorship and also if you start a partnership, always remember that there is no separate legal entity. So the thing is like this. Let's say you start a sole proprietorship business, and then one day, one of your customer just not happy, and he take your business to the court. Maybe he ate the customer ate something in your restaurant, and then he got sick, and then he take your business to the court. So when when your business has to answer something in the court, you as the owner of the business has to go to the court. That is what we call as no separate legal entity. Same goes to a partnership. Let's say you have 5 friends and then you start a restaurant. One day a customer come and she does not happy. She got sick, so she sue your business in court. When she sue your business in court, you as the owner of the business has to go to the court. It is when somebody take your business into the court, it means that the owner of the business has to answer in the court. There is no different in terms of law. There is no difference between the owner of the business and the owner and the business. That is in terms of law. In terms of accounting, the owner of the business and the business are different. But in terms of law, right, the owner and the business are same. And then number 6, you can see there, if you start a sole proprietorship business, no written agreement. There is no need for a written agreement because the sole proprietorship is owned only by one person. But if you start a partnership, you have to write a partnership agreement. That agreement will specify how many partners. Each partner has to do what for the business. Each partner has to contribute how much capital to the business. Let's say the business is making profit, how to distribute the profit among the partners. Let's say the business is making loss, and then how to distribute the loss among the partners. So partnership agreement is very important document. Okay, if you start a partnership in Malaysia, you have to write a partnership agreement. And then number 7, type of businesses. So let's see that sole proprietorship business, most of the time a laundry shop, mini market, what else? Small restaurant, grocery shops. These are typically in Malaysia owned by one person, or they are sole proprietorship businesses. Partnership in Malaysia, most of the time partnerships are formed by professional. For example, doctors, they want to start a clinic, so several doctors works together and start maybe 3 clinics. 3 doctors or 4 doctors or 2 doctors, they start several clinics and they form a partnership business. And also lawyers, several lawyers, they like each other, they start a legal firm. So they start a legal firm, and that legal firm is owned by several lawyers, so they start a partnership business. Architects also do the same thing. Accountants also do the same thing. Several accountants, they start a business, they start an accounting an auditing firm or audit firm, so they start a partnership business most of the time. Okay, number 3, the third type of business in Malaysia that we have in Malaysia is companies. I will continue this video. Do not forget to write your name and matric number in the comment section. Okay, I will take that as your lecture attendance. I will make a second video for this lecture notes.